Welcome to the TAC Index AI Podcast Weekend Edition. We're the place where we blend TAC IP data, reports, and charts with the latest news in logistics, especially air cargo.
That's right. And today, our mission, really, is to unpack this week's air cargo updates. We'll look at how things like jet fuel prices, overall capacity, maybe even what's happening with sea containers, how that all shapes the bigger picture, the macro market.
Exactly. We want to get you informed, fast, and maybe hit you with some of those surprising facts that, make the complex stuff a bit clearer. And what we're really digging into today is this kind of surprising resilience in global air cargo. How is it holding steady when everything else feels like it's, on a knife edge?
Precisely. We'll look at the rates, where stuff is moving, then zoom out to those big forces, geopolitics, economics.
Right.
Think of it as your express lane to understanding global trade's arteries.
And why they're maybe not as shaky as you'd think. Not yet, anyway. Okay, let's start with that bird's eye view. Global air freight. What's the snapshot?
According to the latest TAC Index data, week ending July 7th, not much changed globally last week.
Yeah, the main global index, the Baltic Air Freight Index, BAI00, it edged down just 0.1%. Minus 0.1%. We over a week. Tiny.
But how does that tiny change fit into the bigger picture?
Well, that's where it gets interesting, because while it's almost flat week on week, the BAI0 is still down minus 7.3% compared to this time last year.
Okay.
So that tiny dip, it's not just noise. It feels like the market is just waiting, holding its breath.
These are the tariffs.
Exactly. Everyone's watching that 90-day suspension of higher U.S. tariffs on goods from China, Europe, other places. Yeah. What happens when they end? That's the big question looming. It shows how policy uncertainty can almost paralyze things,
Yeah, it really can. Okay, let's zoom in on Asia, China, and beyond. Even with global stability, you see some interesting stuff happening there.
Rates out of China, the big lanes to the U.S. and Europe, mostly unchanged overall. But wait, there's something new here, right? TAC Index has these BAI spot indices for Hong Kong now.
Yes. Public trials started July 1st, and they track purely spot rates. Yes. So the price for immediate shipments, not the long-term contracts.
And
they were actually edging up a bit during the week, just slightly.
So the spot market shows a bit of life, but what about the overall Hong Kong index, the BAI 30?
That one includes both spot and forward contract business. It was up plus 2.4% week over week. Still down year over year, but only by negative 8.2%. So better than the global average.
And Shanghai, BAI 80.
Similar story. A small uptick, plus 0.9% week over week. Still down negative 9.6% compared to last year, though.
Okay, so what's the takeaway for listeners here?
It means even if the global average looks flat, you got to look closer. Specific hubs, these new spot indices, they show more dynamism, maybe shifts in demand, maybe supply tweaks in certain regions.
Right. And we also saw Vietnam pick up a bit. Week over week rates to the U.S. and Europe increased after falling recently. Still way down year over year, but clawing back.
India, though, pretty much unchanged. More stable there, it seems.
Okay, let's cross continents. Europe and the U.S., what are the currents doing there?
Europe outbound, it's a mixed picture. Overall rates were lower going across the Atlantic to the U.S. and also lower to Japan.
But higher to China.
Interestingly enough.
Yeah.
If you look at Frankfurt, the BAI 20, it was down slightly overall, negative 0.7% week over week.
Yeah.
And negative 7.2% year over year. Higher rates to North America got canceled out by falls on the Asia routes.
Now, London, BAI 40. That one jumped out at me. A big drop, a negative 11.5% week over week.
Yeah.
But, and this is the kicker, it's still way up, plus 20.2% year over year after some huge gains recently. That's quite a swing. How do we square that? Is it a correction?
That's a great point. It looks dramatic, right? But you have to remember June. London outbound pricing surged, like plus 25% month over month in June.
Right.
So this weekly drop, it might just be a correction after that big jump, or maybe some specific short-term demand spike faded, or capacity shifted tactically. Doesn't necessarily mean the underlying rebound is over.
So the year-over-year strength is still the main story there.
I think so, yeah.
Yeah.
It suggests London has some real resilience, maybe specific e-commerce flows or something, boosting it. It's a good reminder not to get too caught up in the weekly noise without that longer view.
Got it. And you mentioned some new lanes being tracked.
Yes. TAC added lanes out of Europe to Mexico, Brazil, India, Australia, South Africa. Mixed week over week, but consistently positive year over year. Suggests these emerging trade corridors are really gaining some steam.
Interesting. Okay, U.S. outbound now.
Mostly lower week over week.
Yeah.
Down to Europe, down to China, down to South America.
Any exceptions.
Miami. Southbound lanes out of Miami kept climbing. adding to recent gains, still comfortably ahead year over year. Seems to be a strong spot.
In Chicago, BAI 50.
Edged lower, down MEDIC 0.7% week over week, and MEDIC at 10.5% year over year.
So the big takeaway here is, it's really not one single market, is it?
Not at all. It's a patchwork. Some lanes feel pressure, others are growing. Reflects how global trade patterns are constantly shifting and evolving.
Which brings us squarely to those geopolitical undercurrents, the tariffs. That's clearly what's driving a lot of this caution, this holding pattern.
Absolutely. It's the elephant in the room, and the deadlines are piling up.
Right. Today, July 9th, that 90-day pause on higher U.S. tariffs for the EU and others was supposed to expire.
Yep. Then July 14th, the EU's retaliatory tariffs pause ends, and August 10th is the big one for U.S.-China. The end of the deal delaying those really high tariffs.
And we're already seeing action, aren't we? President Trump didn't wait for the deadlines.
No, he didn't. On July 9th, final tariff notices went out to 7 smaller partners, like 20% on goods from the Philippines, 30% on Sri Lanka, Algeria, Iraq, Libya, 25% on Brunei, Moldova, all starting August 1st.
And that's on top of others announced earlier.
Yeah, another 14 notices, including 25% for South Korea and Japan, also starting August 1. Plus, he's planning 50% on imported copper and expects to target semiconductors and pharma soon. It's rapid fire.
Definitely keeps everyone on their toes. What about the EU-US talks? Trump sounded sort of optimistic.
He said talks are going well, might announce the rate in a couple of days, mentioned the EU being much more cooperative. The EU trade chief wants a deal soon, and the U.S. deadline got pushed to August 1st from today.
Complicated.
The Italian economy minister called them very complicated. So mixed signals there.
And the impact. These tariffs are adding up.
Oh, yeah. The effective U.S. tariff rate is now 17.6%, up from 15.8%, highest in 90 years. Treasury Secretary is projecting $100 billion collected already, aiming for $300 billion by year end.
Wow. But there's criticism too, right? Like Governor Healy calling it a failed trade war that just raises prices.
Right. And equity markets mostly shrugged it off. The yen stayed weak. But that criticism highlights the direct hit. For you, the listener, these aren't just headlines. They mean higher shipping costs, maybe different trade routes, and ultimately, it affects the price of goods.
Businesses must be scrambling. Are they just eating the costs? Or fundamentally changing where they source things from?
It's a mix. Some absorption, maybe, but definitely active reassessment, looking to mitigate, reroute. That's likely part of why we see some of those regional shifts, those new lanes gaining traction. They're trying to adapt.
Okay, let's rewind slightly to June. You called it tumultuous. Middle East conflict escalation, flight delays, cancellations.
Right. And crude oil surged. Jet fuel jumped almost 20% month on month by June 20th, based on Platts data. Then it fell back fast after the ceasefire on the 24th.
But here's the paradox, right? Despite all that drama, the global air freight index, BAI00,
barely moved, drifted just medical 1.1% over the whole 4 weeks to June 30th.
Why? If jet fuel's spiking and there's conflict?
Well, partly because the busiest lanes, Trans-Pacific, Transatlantic, they don't really fly over the Middle East airspace extensively, though some Asia-Americas cargo does use Middle East carriers. But I think the bigger reason is...
the tariffs again.
Tariffs again. It shows where the market's real anxiety lies. Even a regional conflict and fuel volatility didn't shake the index much. The potential U.S.-China trade war, that seems to be the dominant factor overshadowing almost everything else for these major routes.
That's really telling. And even the temporary tariff relief back in May didn't last long.
No. The U.S.-China pause gave a brief lift, but demand on Trans-Pacific slipped again pretty quickly.
Especially e-commerce.
Ah, yes, the de minimis suspension impact. Explain that again quickly.
Sure. De minimis lets low-value shipments, usually under $800 for the U.S., come in duty-free with simple paperwork. Suspending that for places like China meant those small e-commerce packages suddenly faced duties delayed.
Making them much less attractive. Exactly. So Chinese platforms just started diverting those volumes elsewhere. Europe, Southeast Asia, where the rules were still favorable. Shows how a small policy change can reroute huge flows.
And regionally in June, Shanghai saw a rise.
Yeah, BAI up plus 3.6% month over month. Rates to Europe and North America both climbed over 3%. Probably general cargo, plus maybe some restocking before these July tariff deadlines hit.
But Frankfurt went down.
Frankfurt outbound, BAI 20, declined McCutch 3.75% month over month in June. Even while London, BAI 40, had that huge plus 25% surge we talked about.
Which shows how localized things can be.
Absolutely. Demand spikes, capacity adjustments. It varies hub by hub.
Okay, this naturally leads us to capacity. The freighters. That seems critical for the longer term.
Hugely critical. So trans-Pacific freighter capacity seemed to stabilize in June, around 60,000 to 65,000 tons a week.
Which is down from the peak, but up from the low.
Right, down from 75,000 tons in March, but better than the 51,000 low point in May.
But this isn't new planes coming online, right? It's just moving existing ones around.
Exactly. Repositioning existing freighters between Asia-US and Asia-Europe. Meanwhile, transatlantic freighter capacity actually decreased a bit as summer passenger flights ramped up, adding belly capacity.
But the long-term outlook is worrying. Cargo Facts Consulting talking about a prolonged wide-body shortage.
Yeah, that's the big concern. It's a multi-layered problem. First, there aren't enough suitable older passenger planes available to convert into freighters, what they call feedstock.
So we still see old planes flying.
We still see lots of older 747-400Fs, MD-11Fs. Second, certifying new conversion programs, like for the 777, is facing delays.
And the manufacturers, Boeing, Airbus.
Production bottlenecks. The brand new freighters, the 777-8F, the A350F, they're not expected until 2028. And Boeing's current 777F production line finishes its backlog in 2027, meaning no new Boeing freighters delivered at all in 2027.
Wow, so net fleet expansion looks really slow for years.
Very slow. More than half the upcoming deliveries are just replacing old or retiring planes. So limited real capacity growth, probably through the early 2030s. It points to a tight supply environment.
For like the next decade.
Pretty much, which could really impact rates and how companies plan their logistics.
And how are operators adapting now?
Strategically. Big players like Atlas, the ACMI carriers, that's aircraft, crew, maintenance, insurance providers, they're using flexible contracts to move planes into new markets. Mexico, Brazil, Eastern Europe, following the shifting trade rules and tariffs.
Makes sense.
And you see shippers and forwarders favoring shorter-term deals, more ad hoc buys, less locking into long contracts because things are so uncertain.
So for you listening, expect tight capacity to be a theme for a while. It'll likely affect costs and planning.
Definitely something to factor in.
Okay, let's quickly touch on the macro context. U.S. debt. Trump's big, beautiful bills tax cuts. Spending potentially pushing the deficit to 6.2% of GDP in 2025. Adding trillions to the debt. How does that connect back to air cargo?
It connects in shaping the overall economic environment. A huge deficit could impact interest rates, making borrowing more expensive for businesses, maybe affecting investment in logistics infrastructure. It could affect the dollar's value, changing trade costs. It's like the underlying economic tide.
But there's another view, too, that the U.S. economy is proving resilient.
There is. U.S. productivity, growth, they've actually beaten forecasts since COVID. Some argue higher interest rates just reflect stronger growth expectations, a return to normal after years of easy money.
So maybe not all doom and gloom.
Maybe not. But the key thing is unpredictability. What the new Trump administration actually does on policy is still hard to forecast. So shippers, forwarders, airlines, everyone's staying watchful. Keeping an eye on the Middle East, yes, but especially on these upcoming tariff decisions.
Understanding the macro picture helps see the big chessboard that air cargo plays on.
Exactly. It influences demand, costs, investment, everything eventually.
Okay, quite a journey this week. We've seen a global air cargo market that looks stable on the surface, but is actually navigating some serious geopolitical shifts and nervously watching those tariff deadlines. We saw those pockets of activity, Hong Kong spot rates, Shanghai, the mixed results out of Europe, London's volatility, Miami's strength.
And that crucial context of long-term freighter capacity constraints, painting a picture of tight supply for years to come. It's this constant dance between supply, demand, global events, and policy.
So here's a thought to leave you with. Given this complex mix, the geopolitics, the tariffs, the real persistent capacity crunch, how do businesses move beyond just reacting week to week?
Right. What innovative long-term strategies might emerge to navigate this new normal of unpredictability? How can supply chains build genuine resilience, not just flexibility?
Something to think about for your own industry, your business, maybe even just as a consumer watching prices. This deep dive, as always, is just the start of hopefully building that informed perspective.